Hey, what is up, everyone? Welcome back to Market Psychology 101, where we practice conditioning our minds to find value where there's fear and to be cautious where there's greed. If you find anything I say to be helpful, please like and subscribe. Today, we're going to be looking at a couple different things, such as the S&P, the VIX, the yield curve, unemployment rate, fear and greed index, so on and so forth. Right now, we're taking a look at the S&P on a yearly. As you can see, I drew this ascending trend line to show that when we come down, we tend to bounce off of it or near it. Excuse me. If we zoom out a little bit, actually, we can zoom out a bit more, that even before 2020, it can go all the way back to the end of 2018, start of 2019, we hit this trend line. 2020, the COVID crash, we went through it, but ever since we've been bouncing off of it. Now here was October of 22 is a great time to buy, and now we've been ascending upwards, slowly hitting this trend line. Now, not every stock that you're going to want to buy is going to be down near their lows when the S&P is near their lows. This is just one way of looking at the macroscopic view of the whole market. I think when you consider stocks like the main ones in the Magnificent Seven, Apple, Tesla, Microsoft, Nvidia, and so on, that they will be more affected by these. So right now you can see, even in the relative strength index, how we are overbought, just like we were in July, that it looks like this very may well kick over. Now, the time between these peaks and valleys, you can see here June, 2 months later to August, and then 2 months later to October. So October, 2 months later, December, 2 months later, maybe in February, we will be hitting these lows. And I will be keeping a close eye on this during February, because if a recession is to hit, then maybe we see the lows break down and get down to here, something like a 3,700 S&P. If it gets below that, then we'll we'll go from there. Let's take a look at the VIX. This is the volatility index, and as you can see here, we are in lows not seen since before 2020. And so you have to ask yourself, are we getting ready to shoot up? Is there going to be a very volatile moment coming up where we sell off? Or are things just overall getting greedy and boring because the market's slowly melting up? Not a bad thing if you have bought in earlier when things were really down. You want to see over time the VIX slowly trend this way and then buy when it shoots up. Again, we'll just take a look at this really quick. Sorry about my dog. This is the unemployment rate. We've taken a look on this with various buy and sell indicators. A lot of them say the same thing. You notice that we get a buy signal. I mean, we have this one here that's in here that isn't the best, but anytime we're getting ready to round back up and we are at lows, and unemployment not really seen since the dot-com bubble and in the 70s, before inflation was a thing. So will we see unemployment start to shoot up from this buy level? Let's take a look at the yield curve. Right now the yield curve is inverted, and it got inverted at levels not seen since the 80s. This was during the second large wave of inflation, which is obviously something we've been dealing with lately. And as you can see, since the 80s, that when the yield curve's inverted, we usually get a recession afterwards during the uninversion. Here in the 90s, there's that short recession. and it was well after the uninversion. 2000, we were inverted. The recession hit well after. 2008, recession well after. Now, the recession, this is something important to note, and again, we have one over here in 2020 with COVID. What's important to note with the recession is when they call a recession, that does not always signal market bottoms. Oftentimes, the market will have bottomed before the recession. Usually, by the time they call recession, that's probably your last chance to really buy the dips, or at least as low as they can be. So just something to keep in mind. When they call recession, usually we are about coming out of those historic dips. We're going to take a look at dumb money versus smart money. This is just from the last 5 years. And as you can see, the S&P, when we peak, we have an inflow of dumb money, just as we did before 2020. Here, I'd say dumb money, the retail investor was a bit better, but when we were bottomed out in October of 2022, I know it says September, but it was during October, when we were bottomed out there, dumb money wasn't buying. Right now, if we take a look within the last year, dumb money hasn't been doing too much, and we've been going up. So is dumb money making smarter choices? Kind of seems that way, at least for the moment. This is the dumb money confidence chart. And we'll take a look at smart money. And we can see that smart money confidence, look at this, it was the opposite. They were buying heavy when we were dipped over here. And they were buying heavy when we were dipped in October. They were buying heavy before we had our run in July. What is interesting to me is smart money and dumb money is doing something kind of opposite here. So you have to ask yourself, what's going on? Are we about to possibly break to all-time highs? I'm not sure. And smart money doesn't always get it right, just as dumb money doesn't always get it wrong. But it's just something to consider. Again, here at Market Psychology 101, we want to practice conditioning our minds to second guess everything, to be our own contrarians. And we can have 9 out of 10 signals showing us that maybe there's better buying opportunities or maybe this is a selling opportunity. But you do need to consider all the signals. And this is one that shows the opposite of some of the other things we looked at. Here we're going to take a look at Fear and Greed Index. And as you can see, greed is really high during the market peaks. Right now, greed is going higher. So will it get above this 75 range? If I had to guess, I would bet on it going higher by the end of December and then falling back down again towards January and February in those levels. So anyways, I'm going to wrap it up here, guys. I will make a separate video all about crypto. I'm just playing with some different types of video formats, see what works best for the viewers, for myself. But remember, none of this is financial advice. I'm not a financial advisor or a trader. Everything I say is just my opinion based on years of knowledge and experience working in the field of psychology, which I have used to find value in the markets. And so if you are a medium to long-term investor, not a trader, but an investor who wants to buy and maximize your value, I think this would be a good channel for you because we will take a look weekly at some of the macroeconomic conditions. So that's all for today, guys. I hope you all have a wonderful weekend. Take care.